Business over drinks. Business over drinks. This is Dave and Terng. This is business over drinks.
Hello, everyone. My name is David, calling in from Brisbane. We have a very special guest today. But before I introduce him, I just wanted to set the scene a little bit. So, sometime back, my brother was raving to me, like this was maybe over a decade ago. My brother was raving to me about this weird thing called Bitcoin and how people were mining these things and buying and selling them like they were stocks. It confused the hell out of me, so I ignored it, then went about my day. Then a few years after that, Bitcoin was making the news again, and people were going crazy about how this thing was now worth $250. And then a good friend of mine went on a buying spree. But being the wise investor that I was, I thought this is at its peak. $250, that's too expensive. Who would ever buy a Bitcoin at that price? It's only going to crash from here. Plus, there were all these other random coins popping out of nowhere, and it all just seemed like a scam. Now, fast forward to 2021, and my dear friend is now considering selling his Bitcoin, which are now worth about $72,000 Australian as of today, the 16th of March. And then you get artists like Beeple, who sold a piece of art via NFT, which is based on crypto, for 69 million. And then I guess was just mentioning earlier how people like Elon Musk were buying $1.5 billion worth of crypto. So which leads me to our guest. So I'd like to introduce Tim Lea. So Tim is a veteran of the cryptocurrency space, having been an active trader, commentator, and cryptocurrency investor since January 2015. He's a keynote speaker, further to his book on the blockchain in plain English called Down the Rabbit Hole, Discover the Power of the Blockchain. He has been actively involved in cryptocurrency projects linked to film piracy, loyalty, and fractional ownership. Most recently, he's working with an international team on a project involving supporting decentralized finance, which is currently in stealth mode. So welcome to the show, Tim. How you doing?
Yeah, good. Thanks, guys. Thanks for the invite to come on. Very happy to try and share any little parcels of knowledge I might have that might be useful.
I'm really excited for this episode, Tim. I've got a lot of questions about Bitcoin and crypto in general. Also, I've been drinking quite a lot, so it's going to be a really good episode. Before we start, guys, maybe
conversation about cryptocurrencies, I find.
Yeah, those are the best conversations, though. So before we get started, I was thinking maybe we should just introduce our drinks real quick. I'll start off. So I'm drinking Yealand's Sauvignon Blanc. So it's a nice white. It's a New Zealand white.
Ooh.
It's pretty good. I opened it up because we were cooking and we needed some white wine, and then I just finished the bottle. So that's not going well for me. But Dave, what about you?
I have a new favorite beer, which is from Crossroads Brewing, and we actually interviewed the founder in another episode. But not trying to be biased here, but it's really good. It's only available in Singapore, so I'm very lucky to have one. But this flavor is Orchard Road apple cider, and it's based on Orchard Road in Singapore. It's sweet. It's really good. Love it.
Tim, what about yourself?
I'm jealous. I mean, I'm sort of trying to get healthy and lose a few COVID kilos. So I'm drinking some green juice from which is goodness.
Looks appetizing, man.
It's pear, pink lady apple, banana, cucumber, spinach, and kale. So it's all the green stuff. So it's got to be healthy. But my true passion is this, which is unopened at the moment, which is an organic Shiraz by a little winery out of New South Wales, and in an entrepreneurial venture, I wrote and directed a feature film, and we actually got them. They sponsored the film, so I've been drinking their wine ever since. But I'm saving that until I've lost my target of 5 more kilos. So I'm drinking the healthy stuff, gentlemen, at the moment. But
once you've lost the 5 kilos, you'll get back to drinking and gaining that 5 kilos back.
Oh, I know. It's always a problem,
Well, this is completely out of topic, but when you were younger, did you ever picture yourself, like, do you ever think one day when I get older, I'm going to be drinking green juice that's a mixture of leaves and fruit?
Everything I don't like.
Are you implying that it's not good then? Is that what you're saying? You know? I'm being healthy and you're putting alcohol and natural poison into your body, and I'm putting natural, healthy stuff, which unfortunately does have the side effect of turning your number twos green. So it means it's obviously something good. Sorry, that's a bit too much information, I know. But
no, that's how we know it's our podcast, when we start talking about the number twos. That's how we know it's our podcast.
That's right. But we do it in the polite way, you see, because being British, I can't say I find it a bit of anathema to say the poo word, let's say. So anyway, I'll do the polite version wherever I can, all right?
All right. I mean, I think before we turn off every single listener on this podcast, because we're going to talk about poo a lot. Dave, why don't you jump in with the first question, man?
Yeah, so Bitcoin, right? I think a lot of our listeners are having trouble, myself included, to try and grasp the concept of Bitcoin and cryptocurrency. Is there any way to explain what it is in plain English?
Sure. I mean, it's probably, if you like, I can do a quick 90-second plain English introduction to Bitcoin, which will actually enable everybody to understand what it's about. It'll also, because Bitcoin is being driven by blockchain-based technology, which is a technology that's been around since 2009. Mm-hmm. So I can just go through that as a very plain example, if that would help, just to sort of enlighten you. Because if you imagine that David, David, let's say that I steal your phone, all right? Yeah. In order to establish the truth about whether I stole your phone, we go to a court of law. Normally there'd be a defense lawyer, prosecution, and the judge would say, okay, Tim, you stole David's phone, off you go to prison, whatever it might be. But let's imagine, because as a podcaster, you are so super famous, you've got 5,000 independent members of the paparazzi following you wherever you go.
Very true. Right? Very true words.
Especially given you're drinking the Orchard Lane beer. That's particularly important, right? So imagine you've got 5,000 photographers following you around, and I steal your phone. Now, the chances are they're going to capture that moment of me stealing your phone. So in order to change the facts, I've got to persuade 2,500 of those photographers to give me those images or change their images to avoid going to prison. Okay? But let's imagine that I have to persuade at least 2,500 of those photographers to change their images, because in 10 minutes, all those images are going to be locked in a bank vault, permanently sealed with a combination lock on it, which has more combinations than there are grains of sand on the planet. And then imagine that there's a camera inside that vault connected to the internet, that everybody can see those images. I'm going to be in a lot of trouble. Okay? Now, that is the blockchain, because the photos are permanently stored in a vault where you can actually view them, but you can't change them. Okay? And so the blockchain basically is where data, instead of the paparazzi, think of 5,000 independent computers. And instead of the photographs, think of data. So the data is actually sent to 5,000 independent computers, and they collectively verify that data. They run the same data at the same time. And once 51% of those computers agree the data, it's permanent. And that becomes a permanent record of truth that cannot be changed. That is exactly how Bitcoin works, all right? In terms of, you have the miners that actually cryptographically have to solve a problem. And by solving that problem, putting a lot of computer power in place and that type of thing, they bundle up bundles of data and then submit that to the 5,000 other computers. And once 51% agree, that data then becomes permanent. So the blockchain, and in Bitcoin, is an immutable database that cannot be altered. It's a peer-to-peer database that cannot be altered. So that's what the blockchain is in plain English. So there you go. Does that make sense?
It makes more sense than any of the countless YouTube videos I tried to watch and understand. this
Yeah,
went. So
and I was thinking no one was going to steal David's phone. So yeah, no, I understood that.
it's an iPhone, man. But
but the key thing to understand about Bitcoin, I mean, Bitcoin was the first creation, all right, back in 2008, the white paper first came out. And certainly I would urge anybody that's interested in this space to read the original white paper. It's 9 pages long, 8 pages are in plain English, there's 1 page of maths. But the abstract summarizes it completely, because it summarizes where the whole of the cryptocurrency market is. And in the abstract, it says it's a form of electronic payment between people that does not, between people individually, that is not required to go through a financial institution.
Yeah.
So what it means is, for example, I mean, I'm from the UK, from a place called Brighton on the south coast, for example, and I've got money in the UK. Now, as it stands right now, it is quicker for me to fly to Heathrow, drive down to Brighton, go to my bank, pick up the money, go to Brighton, have a fish and chips and all of the great cuisine that England's got to offer, drive up to Heathrow and fly back to Sydney than it is to go by the banking system. The banking system internationally takes about 3 days, typically. I mean, there are a couple of fintechs that are reducing that.
Yeah.
They charge between $25 and $50 a time to actually do that, and the exchange rate is about 2.5% to 4% below market rates. Bitcoin, or the blockchain, cuts all that out. It doesn't need to go via a banking institution. It's a new set of payment rails. So what it means is I can transfer money via Bitcoin, and it'll clear in 60 minutes tops, in 30 minutes at the worst. Other cryptocurrencies that have spawned off Bitcoin can actually get near instantaneous payment, cleared funds internationally.
But it's different, because that money isn't fixed. Because if I buy 1 Bitcoin, for example, $72,000 now, it's not going to be the same tomorrow or in an hour from now. How does that all make sense? Or
well,
how does that
basically,
all work?
if you think of, I mean, yes, you would in that particular case, you would transfer from Aussie dollars or Singaporean dollars to Bitcoin, transfer it across the Bitcoin network, and arrive in overseas. Or alternatively, you can use a variety of other other cryptocurrency coins. And what can happen is, if you literally get something transferred and it arrives within, say, 30 seconds and it's fully cleared, you can immediately at the other end sell it via your cryptocurrency exchange locally. So in that particular way, you won't have, I mean, you might have a very small exchange rate risk, but if it clears in 10, 15, 20 seconds, which some of them do, then what it means is you actually get access to that money immediately. So for example, I mean, I've been trading the cryptocurrency market since 2015, and I've got exchanges in the UK, in one in Germany, one in Hong Kong, one in the States, and I transfer funds between exchanges, and they're cleared in, as I say, literally. I mean, the worst is probably 2 to 3 minutes on certain cryptocurrencies, but it's almost nearly instantaneous. So overall, it's filling a vacuum that the banks can't fulfill at the moment.
That's really interesting, because I mean, the conversation around here, at least in Singapore and in Asia, a lot of times is the fact that people still aren't 100% convinced about crypto, right? So that all the conversation Bloomberg, CNBC are having about crypto, and all the banks are now kind of exploring crypto as an option. Now you can buy certain things, you can buy certain cryptos through banks in Singapore. One thing that I think everyone is uncertain about is the fact that the market's going really crazy, right? Like it's insane at the moment. Like the price of Bitcoin is insane. Some of the coins are just going off the charts, right? Is it possible, is there a simple way to explain why this is happening and how this is happening?
Yeah, I mean, basically the dynamics of the cryptocurrency markets, and there are nuances within it, but they're primarily driven by Bitcoin, to be honest. if Bitcoin sneezes, the rest of the market catches a cold. I mean, for example, Bitcoin fell by 10% overnight, which it has a habit of doing from time to time. And the rest of the market was just decimated. But it always, tends to come back. So in order to look at the value of cryptocurrency in general terms, let's start with Bitcoin, okay? Mm-hmm. And one of the things that's really important to understand about Bitcoin is that nobody owns Bitcoin. You own your Bitcoin, but nobody owns the infrastructure. So instead of it, there's no multinational, there's no corporation, there's no individual. Instead, it's run by open source computer code, which anybody can view, right? You can go online and you can see it. And it's run by the community of miners and nodes. So the miners provide the infrastructure to provide a secure network, and the nodes provide the confirmation of information. So what that means is that there is an open source monetary network. All right. Now, that may not mean much, except when you consider what's going on economically around the world. All right. So, for example, if you look at in the United States, I use the United States, I'm not singling them out, but it just happens to be quite interesting. As of the 10th, I think it's the 10th of February, and the Fed have published this data, so I'm not revealing any confidential information. 35% of all US dollars ever printed have been printed in the last 10 months. Okay? So just let that sink in. Every single dollar, ever since the dollar's been produced, 35% of that total value were printed in the last 10 months. Now, monetary economics at its very, very basic level is when there's too much money chasing too few goods. Now, the pandemic has been horrible. It's been horrible for everybody. And governments have had to deal with it in an extraordinary way. And it's what I term it's printing press economics. And it's not just the States, it's the European Central Bank and the Japanese Central Bank. Now, history doesn't repeat itself, but it does tend to rhyme. That's a quote from Mark Twain. And if you look back in history, for example, I mean, at home, I haven't got it here with me, but I've got a $50 billion Zimbabwean dollar note, all right, which just highlights how the currency got out of control. Even Venezuela, there are photographs and videos that I'm sure you might have seen of just money just flowing through the streets because the money has no value. Yep. And it's not just, and it's also that when you look at what has happened with major countries, it's not just, tin pot countries that this has happened to. Germany in the 1920s had hyperinflation, where they had literally the same situation. And that was all about, at that particular time, that was about the Germans at the time who declared World War I, worked on the basis they were going to win the war and they would actually get everything paid for because they funded it by debt, and they were going to get everything paid for by the reparations of the defeated allies. Now, obviously, that didn't work out. So whenever you print money, there is a propensity for very, very high levels of inflation, okay? And that's why you may have seen last week, there was a bit of a sell-off in the stock market when the bond yields were starting to rise, because that's indicative of if interest rate starts to rise, that means, okay, the economy is starting to come back to a degree, but it also increases the chances of there being an increase in interest rates, which will cause, major sort of problems. So what's going through a lot of corporate heads, especially in the States, is, hang on a second, we've got all this money printing going on, this stimulus and all this type of thing. I mean, it's like if I gave every single one of your listeners $100,000 US right now. I'm not going to do that. I might give them 50,000, but not 100,000. But if I give everybody $100,000, what would happen? Everybody would go out and spend. They go crazy, right? So that's taking an extreme example. So corporate America and further afield are saying, well, hang on a second. Governments drive the policy, and they're driving the money printing because of the extraordinary events that are happening. What asset class can they look at that is not affected by governments? And they've looked at Bitcoin and said, you know what, because it's decentralized and nobody owns it, here is an open source monetary network. And there's a quote by an author who says, there's nothing more powerful than when an idea has reached the right time to come. And it's very much Bitcoin and cryptocurrencies are about now. Because in the States, for example, there's a guy from a public listed company, a guy called Michael Saylor from a company called MicroStrategy, who bought $425 million worth of Bitcoin in October last year. They now own $2 billion worth of Bitcoin because they're looking at their treasury, the money they have actually generated being held in bank accounts and not earning anything. And they're saying, where can we deploy that capital? And there are very, very few places where they can have any real confidence of what's going on. So what's actually happening is people are starting to view Bitcoin as an open source monetary network, right? So that's probably a long-winded way of answering your question, but that's a lot of the thinking that is going on. And I would urge any of your listeners to actually look on YouTube for this guy called Michael Saylor. He's become a real sort of thought leader in the institutional space about investing in Bitcoin. And he organized an online conference in February to help people understand his process, and he open sourced the process and the documents. 25,000 companies subscribed for that live streaming event. It crashed their servers so much. And because, given it takes 6 to 12 months for major corporates to make an investment decision, what is actually happening is there's lots of stuff that's building under the surface to actually drive increased utilization. This is not financial advice, by the way. This is just my observations on the market. So it's really, the timing is perfect for Bitcoin specifically to be in this sweet spot where people recognize there's a lot of, I was going to use number twos, there's a lot of crap going on in the international market.
That's the way English people swore. Like, I never picture them as being polite. Like, I thought English people swore.
I think Tim's the more, I would say, maybe upper class Englishman. I think you're thinking more of the.
I wish I was. Unfortunately, I'm just a Pom in Australia who's trying to make his way in the world and trying to help educate people about what's happening in the cryptocurrency markets. But I might, as the green juice goes through me, I might drop some expletives in the
Yeah, it's more impactful than the wine. Hey, Dave, man, you got a question for Tim?
Yeah. So Bitcoin. Yeah. So if you have Bitcoin, then what are all those other coins about? Doesn't that just dilute the purpose of Bitcoin? There's Dogecoin, there's Litecoin, Ethereum. What does that all mean?
Yeah, I mean, when you mention Dogecoin, I just laugh. Dogecoin has been promoted by Elon Musk.
Hey, billion dollar valuation. $1 billion valuation.
Well, why is he promoting Dogecoin? Is it just for his own profit?
No, I think to be honest, from what I see of Elon Musk, and I've not met him and I don't know him personally, but I think he likes to play with people's minds. I'll be honest. I think he's quite a manipulative sort of guy, but but I mean that in a nice way as well, because Dogecoin has no intrinsic value. It's a picture of a dog. That's as far as it's gone.
All right.
And now Mark Cuban.
It's my dog, by the way.
Is that your dog, is it? Oh, smart dog.
I own a Shiba Inu.
Oh, right. Okay, awesome. Okay, fantastic.
Yeah.
We see Mark Cuban is now accepting Dogecoin for the Mavericks games. Now, don't get me wrong. I get it. It's a cryptocurrency. It's a good way of promoting and getting something out there. Dogecoin has no intrinsic value other than a picture of a fantastic dog. Obviously, if you've got one of the dogs, David, you must see that. But when you look at Bitcoin, Bitcoin itself is like the grandfather of the cryptocurrency space. all right? And it has to be very solid and very reliable. I mean, it was created by a person, he, she, or they, called Satoshi Nakamoto. And nobody knows who he, she, or they are. In fact, the last time anybody ever heard anything about them was in 2011, when he, she, or they said, I've moved on to different things. But
it was me, everyone. It was me.
Oh, right. Okay. Well, you'd be very careful doing your podcast then, because he's got 1 million Bitcoin that has been locked in within the Bitcoin network ever since 2009. It's never been touched. Okay. So what it means is the grandfather has to be very solid and very reliable. So Bitcoin does very little other than a store of value and a transmission mechanism across international boundaries. But what you've got is the market needs much more than that. So, for example, Ethereum, you mentioned, that's the number 2 in the cryptocurrency space. They have enabled the programmability of funds, of money, all right, through what is known as smart contracts. So smart contracts, just at a very, very top level, are very much like a vending machine. Okay, think of a vending machine where you put your money in to get your sweeties. All right, you put your money in, you choose your sweeties, and then you pick them up. Very, very simple process. But the actual vending machine does all the calculations in the background. Ethereum is like a very powerful vending machine, but it programs money. And I'll give you an example of how this works. Back in 2016, I think it was, CBA, Commonwealth Bank of Australia, and Wells Fargo out of the States did a joint venture test with Queensland Cotton, and they were transporting cotton from Australia through to China. So they looked at smart contracts whereby as soon as the boat arrived in Chinese waters, there was a global positioning, I forget what they actually call them, the actual receiver, let's call it, but on the boat, which indicated longitude and latitude. That was then sent via the Internet of Things up to the cloud to define, yes, the boat's now in Chinese waters. Whilst in the cloud, that then automatically processed a payment to Queensland Cotton from the actual purchaser in China, right? Now, that may not sound like anything dramatic, but if you know anybody that's worked in a bank, or any of your listeners work in a bank, letters of credit, which is the way that things normally work, is a paper-driven system. Mm-hmm. And so what Ethereum does, and other platforms like it, they enable monies to be programmed. And why that's important is the actual technology has been built on from even the basics of programming money. So much so that there are things called central bank digital currencies, which you may or may not have heard of. Very, very few people, unless you're in the space, will have heard of them. But there are 70 banks that are actually looking at central bank digital countries. 70 central banks that are looking at central bank digital currencies. And what that means is you can program the money so that it can be linked into your identity. It can be linked in to your income. It can be linked into everything about you, right? And what it can do is it can segment, for example, millennials. They might say, okay, from an economic point of view, we want millennials to actually save. So they say, okay, you have your bank account with a central bank. We've actually got all the details around you. We'll give you 10% interest. So it incentivizes you to save. And then sort of more mature folks like myself, they might say, right, you've got a negative interest rate of 15%. Which gives me no incentive to keep my money in the bank. So I'm actually going to either go out and spend it or invest in it or something like that. And so all these programmable currencies have come from the initial innovation of Bitcoin, which then led to Ethereum, which has then led to all these other forms of technology. So as the market grows and the market, the banks, for example, need to say, oh, can this technology do that? Then people develop new technology. So Bitcoin was the grandfather, very stable. And there are lots of other cryptocurrencies that have nuances and shades that build on top of each other.
If Bitcoin's a grandfather, sorry to interrupt you, so if Bitcoin's a grandfather, will it eventually become obsolete and the other coins kind of take over, like the newer, sexier ones?
I don't think it will become obsolete. And the reason why I say that is that it has the network effect, all right? Bitcoin accounts for about 60, I'm looking at the 62%. I just checked the charts in front of me. 62% of all the cryptocurrency market, all right? It is recognized as being the most solid, reliable, although it doesn't do much, it's very solid and reliable as a transmission mechanism and a store of wealth. It's become like digital gold in some ways, is the way that people are talking about it. And so as a result, it will become or has the potential to become, should I say, the reserve currency of the cryptocurrency space. Like the US dollar accounts for, I think the figure from memory is 92% of all international transactions are carried out in US dollars, right? Mm-hmm. The power of US dollars globally is so strong as a result of that very sort of network effect.
Yep.
And so Bitcoin, I think, will always have a very strong position within the cryptocurrency space. And because it's seen as this, or increasingly seen as this open source monetary network, it also reflects a proxy of all the other cryptocurrencies that are going on. So I don't think it'll ever die. I think if anything, it will become the reserve currency of the cryptocurrency space.
So basically, the standard for all crypto.
Because if you look at the cryptocurrency exchanges across the world, you can exchange from Bitcoin to any other cryptocurrency seamlessly. It's dead easy. There's not a drama. And it's just intrinsic to the very nature of the whole space. And because it's it's the protocol itself for Bitcoin has never been hacked. Okay.
Yep.
And it's been around since 2009. So, and a testament to that is Satoshi Nakamoto, the original creator, has 1 million Bitcoin, which in today's market, given that Bitcoin is at just under 56,000 US dollars. I mean, that's an insane amount of money that would be a target for somebody to go for. So it's very solid and very reliable and has a very strong network effect. And that's why it will be sustainable. I mean, the value of Bitcoin as a market cap, when it hit $50,000 US, became $1 trillion. That's more than Facebook in terms of the value. That puts it in perspective, all right?
Oh, that's insane.
I want money.
Can we? All right, Dave, man.
Can we have some of your Bitcoin?
I'm giving you way too much information and blowing your mind in some ways, but it just shows you how powerful this market really is and where it's going to be, how powerful it's going to become.
All right, before I get too depressed by how much money people are making, and I'm not in this at all, I just want to take a quick step back. So you were talking about how there are central banks across the world that are actually creating digital currencies, right? Tim, if I remember correctly, before Dave
they're working on them now. They've got yes, they are.
Yeah, before Dave rudely cut me off, I remember that was the question I was going to ask.
He's like that. He's had too many portraits.
He's like that. He's like that all the time. It's personal with him. This is not a question that I had in mind that I think we shared with you before, but I do hope that it's okay. But I don't mean to put you on the spot. But I heard that the Chinese government is trying to create a digital currency with the renminbi or the yuan, right?
Yep.
Is there something that you think would work? Because the interesting thing is, I'll just give some context. I had a conversation with someone who works in the financial industry from China, and they were telling me about how stupid it was to create a digital currency with the yuan. what other, like, but they were coming from a very traditional point of view, right? Do you think that that's something that makes sense with China, like a country like that?
It makes 200% sense for China, in my opinion. Because if you look at the ability to program money, all right, now, you see, in China, you've got WeChat Pay and Alipay, or WePay and Alipay, all right, major payment networks. They're not controlled by the government officially, all right? I mean, you know, you've got the two large, Tencent and Alibaba that are controlling those. But China has a major problem with the second-tier banking sector. It doesn't really know how to control that as it stands right now. With digital currencies, they can control money within the whole economy, all right? They can program money so that even second-tier banks can't lend money to industries they don't want them to lend to, right? Now, because of the very nature of China, with it being a totalitarian state, essentially, they can tell their population what to do, and obviously they do. And so, as a result, privacy is not an issue that they have to overcome in China. If you look at the US or you look at Australia, I can't speak for Singapore specifically, but the amount of backlash that people would have in terms of if you can see what I'm spending my money on, or we can see, or the government can see what David's spending his money on besides Orchard Lane beer, then we've got the situation, you are what you spend, right? You can tell so much about somebody about how they spend their money. So imagine them being able to see how you spend your money. Now, what an invasion of privacy that is. For China, that's not a drama. They can say, you're going to do this, because they've already got facial recognition in place. They've got the social scoring. They've already got a lot of intrinsic things going on. The second stage of it, in my opinion, again, this is all my opinion, is that China have implemented the Belt and Road strategy, where they've actually bought or they've invested in ports in strategically important countries. And what they've done is they've invested and said, okay, we'll lend you the money, you pay it back to us. And then when the developing country can't pay it back, they then seize that port, all right? So if they've got all the strategic routes that they've planned over the past, God knows how many years, it doesn't take a rocket scientist to work out that in the weaker countries, developing nations, where they may have, I'm just trying to think, it might be talk about Zimbabwe, or Zimbabwean dollars had all sorts of problems, or it could be, the Kwacha in Zambia, or whatever it might be. They can actually say, okay, you're going to pay us in digital renminbi, not US dollars, right? So all of a sudden, if you've actually got that power, because you've already owned a lot of the infrastructure and you're building up your supply chain effectively, you can say to a lot of developing countries, you're going to use the digital yuan, digital renminbi, as your methodology of payment. And all of a sudden, it means that payments don't go via the SWIFT network, which is very much a US dollar-based banking network. So what it means is that China, from a global position, is going to strengthen their position economically 250% by being the first to have a digital currency that can be programmed according to their needs. The States, it'll take them years, in my opinion, years to actually get a digital currency, not in terms of the technology, but just in terms of overcoming privacy. So I would say your contact, not that they're wrong, I just would suggest to them that they probably might need to look at it a bit deeper, because I think they will then see how powerful it's going to be. And China's doing testing in Shenzhen and different regions of the country around China to test this. And this is going to happen.
I'm gonna tell her that she doesn't know what she's talking about, and Tim
No,
said that
I'm not
she's an
saying she
idiot.
doesn't know what she's talking about.
Yeah, Tim said she's an idiot.
Tim Lee.
Tim
Lee said she's an idiot. I think that's what.
Okay, all right. So Tim Lee says she's an idiot, and she wants some green chicken.
No, I think no, that's a very interesting point, because I think maybe she was looking at it from a perspective, but she had a bias, right, to it. I think that was the main issue. There's a lot of biasness and maybe a prejudice, an inbuilt prejudice to what the concept was.
Well, it's interesting. I mean, as part of what we've been doing business-wise, we've been talking to quite a number of banks, and there's a contact of mine that was working in a Chinese bank, and this was only a couple of years ago, and he was saying how paper-driven the whole banking sector in China really is. You know, where they would actually, to prove documents, they would actually skewer documents with a particular mark to show they've been read. So it's not digitally based at all. I think, you know, banks overall really don't know how much their lunch is going to be eaten. They have no appreciation. Or, of course, the more informed ones do, but we're going to see a decimation of the banking industry. Absolute decimation with digital currencies, because the banks are no longer needed. I mean, I chaired an event down in Canberra. This was back in November 2017, and we had some really great speakers from the Global Blockchain Business Council, which is Richard Branson's think tank out of Switzerland. And these guys and girls have been talking to governments, and they were saying the discussions that the UK were having was, how can the government pay individuals direct, you know, all government employees direct, without going via the banks? And of course, the feedback came back, you can't do that because the banking sector would nearly collapse. So it's going to happen. It's just a question of how and when. And I honestly think that China they're going to be the first major country to seize this space. They aren't the first in the world, by the way, but the Bahamas launched the sand dollar back in November last year as a digital currency, but they've only got about 80,000 people.
The sand dollar. Guessing, is that for money laundering purposes, or is that?
Well, ultimately, with digital currencies, your identity will be baked into the digital currency. So just think of that for a second. No longer will you have cash, right?
I was wondering that, because why do they say people use Bitcoin for money laundering when as you said, they have those 2,000 photographers taking photos of you owning Bitcoin or whatever it is?
Well, I mean, people were. There's a website called the Silk Road. And in my book, it's my favorite chapter that I enjoy writing. Talks about the Silk Road, where you can buy hitmen, you could buy drugs, you could buy anything. And because the banking sector wouldn't provide facilities, understandably from an illegal site, Bitcoin became the method of actually transmitting money, because it is what is known as pseudo-anonymous. All right, I can send you money, or I can send you Bitcoin, but all you will see is the address of my Bitcoin, the money that I've sent, that has been sent to you, and I will know your address, but I won't know who's behind that address. All right, but once you get inside the Bitcoin network, you can actually identify every single movement of transaction, and all the 5,000 computers that are on the Bitcoin network, for example, each of those 5,000 computers hold an entire copy of every single transaction that has ever gone on the Bitcoin network. Okay, so
don't buy drugs with Bitcoin. All right.
Well, with Silk Road, for example, the way they actually discovered how Silk Road was being powered and this type of thing, ultimately it's in the making, seriously. Because what they did, it involved hitmen. They staged somebody's death, okay? There were about 10 different government agencies that came together. And by actually discovering and setting this trap for an employee of Silk Road, they managed to get inside the system. And they could then track every single payment that was made, right? And they actually identified, as a result of that, they identified high-level corruption within the police force once they got inside the system, because everything was auditable. So it's a misnomer to say that people use Bitcoin for money laundering because it's anonymous. It's only pseudo-anonymous. Now you do have some coins that are called privacy coins, specifically aimed at cloaking any form of identity and shielding that. And now there's been a trend that's happened recently where you can no longer trade in certain jurisdictions, certainly in Australia, you cannot trade privacy coins now because of the money laundering concern. And this is what I was saying earlier on about, how Bitcoin is very solid and stable and condensed. Other nuances fit different markets that have different demands. So it's, so Bitcoin is not as anonymous as people think. And indeed, that is one of the really powerful things about Bitcoin in general, because there are specific companies globally that are now analyzing data on the Bitcoin blockchain. So much so that they can identify when those people who hold massive quantities of Bitcoin, because everything's open source, although you can't actually see the name and address of the person that owns it. You can see those that hold coins that might hold 10,000 Bitcoin, for example. You can also see the key points at which they may send those Bitcoins over to an exchange to get US dollars for them. And that will often happen when the price goes up. People will send coins to the exchange, and that's a telltale sign that the price is going to fall. Okay? There's a really good commentator, if people want more information on that, on Twitter. There's a guy called Willy Woo, who's a Kiwi guy based in Bali. And I've subscribed for his paid newsletter, where he actually analyzes all these sorts of movements. And as a professional in the space, I'm really keen to know proactively when those that have got lots of Bitcoin are sending them to exchanges to sell them. Because I know, I'll say shit. There you go. I said shit for you, David, just to make you feel better.
Yes, thank you so much.
Say shit. I've got to make sure that I get myself positioned here. And so this is the powerful thing about when you read about Tesla, having $1.5 billion worth of Bitcoin. If you're going to sell $1.5 billion worth of Bitcoin at some stage, there will be digital fingerprints that will say, oh, hang on a second, this money is being moved. And they've got to declare in their SEC filings, their Securities and Exchange Commission filings, what happens to their level of Bitcoin, because it has an effect on the price of their shares. So there are lots of telltale signs that if you know where to look, because of the transparency of the Bitcoin network, you can actually identify a bucket load of what's going on.
I mean, that's really interesting. I think we could go down the Bitcoin rabbit hole, and I think that's something that we actually want to do. But another topic that we kind of want to talk about, and David, we can always go back to Bitcoin later, but would be NFTs, because I think it's all of the news, right? So Tim, we spoke about this earlier. You just said basically it's headline. It's making headlines now, right? But maybe you can just like the same way that you described Bitcoin, are you able to describe what NFTs are to the people who have no clue?
Okay, right. NFTs are what is known as a non-fungible token. Now, fungibility, if you have a $5 note or a $10 note or a $50 note, those notes are the same. You can exchange them. You can exchange a $50 note for 2 20s and 10. That's called fungibility. But for example, if you actually own a Picasso You can't suddenly slice off half of the Picasso and send it to somebody, because the value of that Picasso will just disappear.
Mhm.
So a non-fungible token is the same idea, that you've got the physical representation of a digital asset, or ultimately be any asset, but a digital asset. So, for example, the best way I can describe it is like this. If you think of a shadow puppet, you know, when you were a kid, you used to do the picture of the dove and the bunny rabbit, and you had the shadow on the wall.
Yep.
All right. Now think of the bunny rabbit shadow. Just put that image in your mind. Go back into your deep childhood and think of that. All right. So the shape that you make with your hand, let's call that a digital file. It could be a Word document. It could be a piece of art. It could be digital art, a JPEG, a video file, whatever it might be. And the shadow, let's call that shadow the cryptographic hash. Now, I don't want to get too heavily involved in the technology, because I don't want to confuse people. But essentially, the shadow on the wall that you're creating of the rabbit, right, is a cryptographic hash. It's like the cryptographic hash of a file. So if you change the shape of your hands into an elephant, that's not the same shadow as was the bunny rabbit. So if you, in a similar way, if you change one pixel or one full stop in a Word document, the cryptographic hash of that document will change. You can go onto Google. If you type in, if anybody's interested in this, type in SHA-256, all right? And this will enable you to cryptographically hash any document. And you can actually see what its cryptographic hash is, what the shadow is. But if anybody looks at the shadow, they can't actually see how you created the ultimate image here. In the same way, the shadow represents that digital document. So the idea is you have a unique record for a unique piece of art, which would be the shadow of a piece of art. And that is actually, within the technology of blockchain, that is a cryptographic hash. And again, I could be getting into a technical rabbit hole here, which I don't want to in many ways, but it gives a unique representation of that one unique file. And the way best to describe this was when NFTs were first explored back in November 2017 with a thing called CryptoKitties, which you may or may not have heard.
Oh yeah, I know CryptoKitties. I know CryptoKitties. Yeah.
Right. CryptoKitties, for audience members that may not know it, these were pictures of cats that were unique pictures of cats. But what they did, they enabled the cats to be bred. So you could breed the cats and create a new cat. All right. Now, these were like human beings. They were all had unique DNA. And within 6 weeks, the number 0 CryptoKitty, the first CryptoKitty was being sold for $170,000 US. It was insane.
Can you still buy them?
Sorry?
Can you still buy CryptoKitties? Like, is that number 0 still for sale? Or?
To be honest, I'm not 100% certain, but certainly CryptoKitties, the guys behind CryptoKitties got funding from Horowitz, who runs one of the big venture capital firms in. Oh
yeah, Anderson Horowitz, yeah.
Yeah, and
YC Combinator. YC Combinator, I think.
I don't know if they're YC Combinator, but the bottom line is they are the people behind the NBA All Stars NFTs.
Oh yeah, Top Shot, right?
Yeah, that's right.
Yeah, Top Shot. Yeah. Oh wow. Okay. No, because I was reading up about Top Shot because I follow the NBA quite closely. So I was reading up about Top Shot. It's insane. Top Shot is going in. The prices are going insane at the moment.
Well, what's Top Shot about?
$250 million worth. It's insane.
Yeah. Is it just like basketball cards?
It's the same people. But one of the challenges that happened was the whole of the Ethereum network got clogged up at the end of 2017 with CryptoKitties. It slowed everything down in 2017, and that's why Ethereum's going. It's got some challenges in terms of scalability. But But NFTs, those are all examples of NFTs, where they are unique pieces of digital art or digital collectibles that you can identify. Here is a genuine piece.
For those of you who don't know, the artist Beeple just sold an NFT for $69 million US.
Yeah,
I know, it's insane. I mean, we're in such bubble territory at the moment. The NFT space is very much like the decentralized finance space was in June to September last year, where a massive wave of money went to decentralized finance, and then it all dissipated away. And the second wave has come through, which has been a lot more solid and reliable. And I think we'll find that's going to happen in this NFT space. I mean, Beeple is an existing artist, and I mean, the piece that sold for 69 million, I think he's created a digital piece of art every day for the last 14 years.
Yep.
And put that together. So, I mean, it's like any form of collectible. You know, there's usually the story behind the artist as well as the piece itself. And I mean, I was, talking with some people today, who are looking at an NFT project. And it's almost that they're sort of saying, oh, if we put NFT in this, can we raise money? And I'm sort of saying, look, you've got to look at the business case. Where is the business value of an NFT? And sure, scarcity is important, but it's also, where's the buzz around sort of buying stuff? The NBA, All-Stars, I mean, the NBA cards were already existent. So they're taking an existing model and digitizing it. And I think, I'm a dinosaur. I mean, you guys are millennials. I'm a Jurassic. I would call myself a Jurassic, okay? But the millennials are used to dealing in digital structures. You're digitally native, right? Whereas old farts like me are just not. And other people prefer to have the tangible stuff they can feel, touch, and smell. But it's got all these spaces would never have happened without Bitcoin, without the initial innovation of Bitcoin. That's why everything gravitates back towards Bitcoin, and that's why Bitcoin is worth 60 or 50. What's happened? Is the price gone? It's over $56,000 now. Thank goodness. So that's why Bitcoin's worth $56,000 a piece for a line of code of about 64 letters and numbers.
Oh wow.
I know it's. I mean, but if you understand these spaces, and I mean, I don't. There are 24 hours in a day, and I'm already using 36 of those. So in terms of actually getting, being on top of everything in the NFT space, I just don't have the bandwidth for it. I keep a holistic view, and very much I invest in some of the technology that's powering the platforms that are producing NFTs rather than the NFTs themselves, because it requires a lot of research to understand the market. The cyberpunks, and a whole variety of other NFTs that are gaining high profile. You have to understand that market so well. And because there's so little liquidity in those markets, so few people would actually have got interest in it. As soon as the stock market crashes, the prices, in my opinion, of a lot of those NFTs will just go through the floor. As people say, oh, this is crazy. Why have I got these things? They'll try and force sell them, and they'll find there's nobody there to buy them, and the prices will fall dramatically.
Hey, Dave, sorry, I didn't mean to, just got a follow-up question on that. So then do you think, right, because one of the questions I want to ask was, like, we're currently in a bubble right now. That's very obvious to, I think, anyone, right?
Yes.
Do you think it'll just collapse on itself, like you mentioned, and we'll just see who survives? Is that going to happen?
I think with any bubbles, like in 2017, there was the initial coin offering bubble.
Yep.
Where, and it's, as Mark Twain said, it's, history doesn't repeat itself, but it tends to rhyme. I mean, I'm old enough and ugly enough to have been through the whole .com boom and bust.
Yep.
And it was the same. In the 1990s, late 1990s, it was, I'm going to add a .com to my business name. Can you give me $10 million?
Yep.
In 2017, it was, we're putting this on the blockchain, putting my pajamas on the blockchain. Can you give me $10 million? And now it's going to be, you know, I'm putting this banana, I'm making this banana into an NFT. Can I have $10 million? All these sorts of bubbles tend to happen. And then, as you quite rightly said, what will happen is when it implodes, and at some stage it will, and I really hope people don't lose money, but unfortunately, I think they will. But out of that, there will be some really good plays that come out of it. And it's a question of just backing the winners, not being lumbered with the losers.
Wow.
Just on that, quick disclaimer: everything we say here is for information or entertainment purposes only. Just assume
I think I know what's coming. Go
just
on.
assume the three of us are extremely drunk and very unreliable. So just
That's
assume
why
that.
I've got the
Don't sue
green
us.
juice. There's no
Yes,
vodka
exactly.
in there.
Oh, thanks for ruining it, Tim. But let's. What would you say? Entertainment purposes only. What is it? What is a winner?
Interesting. And absolutely, this is absolutely not financial advice. I think anybody that's investing in the cryptocurrency space should have Bitcoin and Ethereum. They are the two safest assets in the cryptocurrency space. Doesn't mean that they can't get hacked and that type of stuff. I think it's vital to have those. Because whenever you look at a portfolio of structures and ideas, you have to look at what is termed as the risk-weighted assets. You have to look at where are your high-risk assets, where are your low-risk assets. So Bitcoin, and we haven't even touched on where the price of Bitcoin could go. But before I answer the question on Bitcoin, can I just give you an explanation of what's going on the supply side of Bitcoin? If I can,
Sure.
And you'll understand why as I go through this. Basically, within the protocol, it's open source software. Only 21 million Bitcoins will ever be produced. All right. And that code runs out in 2140, in 120 years. Okay. As it stands today, 18.5 million Bitcoin have been mined. All right. So quick mathematics, that's only 2.5 million Bitcoins that will be mined between now and 2140. Okay, for the next 120 years. Every 4 years, the number of Bitcoin that are actually produced by the protocol is halved. Okay, so the last halving happened last May, roughly last May. So as a result, the number of Bitcoin in existence is 18.5 million. Of those 18.5 million, 3.5 million approximately have either been lost, the hard drives have been stolen, or they have got people have got no access to about 3.5 million Bitcoins. That leaves 15 million Bitcoins. And you've got all this institutional money that is now trying to get involved in Bitcoin. Okay? Now, it doesn't take a rocket scientist to work out what's going to happen. All right? Now, that absolutely is not financial advice. But with this Willy Woo newsletter that I subscribe to, it's only about $50 a month or so it's really worth the investment. He identifies every month exactly the movements of Bitcoin. And the trend is for coins to come off exchanges and people move these to hardware wallets where they're storing it offline. In other words, they're not going to sell them. So people are they're holding, or in the Bitcoin world, they're called hodlers. And that all comes down to a misspelling of the word holder in a Reddit post about, 5 years ago. So people are holding and not selling. The number of coins coming into the market is reducing. And you've got all this institutional money that wants to come in. And the key thing is you've got big corporates putting money in, but institutions cannot put their money into Bitcoin right now because there are no regulated structures. All right. The SEC has not approved the US regulators have not approved an ETF, which is an exchange traded fund, yet. When they do, massive institutions will be putting shitloads of money into Bitcoin through regulated structures. So you've got this big wall of money that wants to do something. You've got the prevalence of the printing of money, and you've got an open source network, and you've got the number of coins that are actually being produced reducing. You can just see the demand and supply narrative. Let's just put it this way: if Bitcoin becomes the same size as the gold market, and the gold market's $9.5 trillion, roughly, there or thereabouts, each Bitcoin will be worth 342,000 US dollars. Okay, so that is not financial advice. Do your research. If anybody's thinking about looking at this, do your research. Don't just put your money in and just say, yeah, I'm going to make millions, Do your own research, satisfy yourself. And what I would say is, one of the things to look at, because Bitcoin is incredibly volatile, that you look at a thing called dollar cost averaging. And the way this works is providing you feel confident through your own research that Bitcoin is going to continue to do that. And I'm invested in Bitcoin. I have a portfolio of Bitcoin, and I have other cryptocurrencies as well. If you're confident it's going to do that, what you do is every week you put in $100. Say on a Friday at 9 o'clock, you put $100 in, whatever the price is.
That was going to be one of my questions. So let's say you just have $100. How do you invest in Bitcoin, given that it's tens of thousands of dollars?
Well, because it goes up and down, it's the idea of, you can buy 0.0001 of a Bitcoin, for example, right? But if you're going to be getting into Bitcoin, if you ride the crests and the waves by the same time every week, statistically, you're going to be matching the underlying trend. Whereas with the the ICO boom in 2017, in December, there was a contact of mine who said, I want to invest in Ethereum. I said, well, dollar cost average. And this is the reason why. She went to Estonia, she's Estonian, and her and her father put money in straight into Bitcoin and Ethereum, and they didn't dollar cost average, and it fell by 40% in the next 2 weeks. And they lost 40%. So they didn't dollar cost average. If you dollar cost average and have the patience, then you will gradually ride the wave. And when you feel comfortable and confident enough, when it dips a lot, put a little bit extra in, right? As time goes on. So, if your listeners are looking towards investing, do consider dollar cost averaging. Look it up on Google as to the techniques. It's fairly simple and straightforward, but I think that's number one. I think everybody should have some Bitcoin in their portfolio. Ethereum's got its challenges, but it's incredibly well supported by the development community. And they are the intrinsic technology. They have been the technology behind initial coin offerings, behind decentralized finance, behind non-fungible tokens. So they're providing a layer for that to happen. They're also going through a restructure of the whole network to go from what is known as a proof of work to a proof of stake. So instead of having miners having banks of computers to actually mine Bitcoin and that type of stuff, to mine Ethereum rather, they're actually going to a proof of stake where you just put money in and it just powers the actual network. So there are changes going on in Ethereum. I think if you're looking at where nice short and medium term gains will come through, in my opinion, again, not financial advice, is to look at the layer 2 solutions. Ethereum has a massive scaling problem at the moment. Because of NFTs, because they've been successful. So with NFTs and with decentralized finance, the network's being used a lot and the fees are ridiculous. I was trying to transfer $1,000 onto an exchange just for a quick sort of hit on something I was referred to. And I thought, I'll put a bit in there, see what happens. And the Ethereum network wanted to charge me $39. And I transferred it to a different exchange via the Tron network, and it was about 10 cents. So Ethereum's got some challenges, but underlying it all is a massive network effect. And then you've got, so the layer 2 solutions are trying to help Ethereum. So there are things like Polkadot, there are things like Cardano, there are things like Matic and things like XDAI that are layer 2 solutions that actually help scale Ethereum. So look at the layer 2 solutions. I mean, I've been a big fan of Matic, which is now called Polygon. And I bought it in at 7 cents and it just hit 45 cents. I don't know, about 2 weeks ago. So these are layer 2 solutions that are helping Ethereum scale. So those are ones to consider. I think those that are powering NFTs, things like Rarible or Rarity, I can't remember. But look at those that are powering the NFT sector, not the NFTs themselves. I think, like in any gold rush, and I remember this from the .com boom, I remember this from the ICO boom, it's the tool makers that make the money in gold rush, right? When you had the gold rush in San Francisco, people that made the picks and shovels made the money, right? Yep. So look at those that are providing the infrastructure. So those and then in DeFi, decentralized finance, and that's we could talk about decentralized finance for hours, or I could, and I might get.
We'll nod along accordingly when you talk about it. Don't worry, David and I'll be like, yeah, we know what you're talking about.
So decentralized finance is an area that I'm getting very deeply into through a stealth project that I'm involved with. And the best way of describing this, and I don't want to get too technical on a financial basis, but the way traditional exchanges work is that you have a buy book and a sell book, bid and offer, right? If you guys or other, your audience actually have sort of bought on traditional exchanges. Decentralized finance is a completely different structure where they have what is known as automatic market makers. Now, without getting too heavily into the weeds on this, everything is based around smart contracts that we spoke about earlier, right? This is why everything is layered on top of each other. And the idea is that you, I, others can actually put in, you actually stake cryptocurrency coins into a pool. And lots of people put these cryptocurrency pools together. And the idea is that instead of actually having bid and order books on a cryptocurrency exchange and they take all the cream out of the center, a decentralized exchange has no centralized operation. And it's all based around the smart contracts and just funds that people put in. So under decentralized finance, and again, if anybody's looking at this, you have to do the research. There's no silver bullet to making good money in this space without high risk, right? You must do the research. I've got to emphasize that, all right? So you can put in 2 sets of coins that might be, let's say it's Bitcoin and Ethereum. Let's keep the high quality to begin with, all right? So you put those into the automated market maker, and the smart contract does all this sort of, remember I spoke about the vending machine before? Yep. It does all the vending machine stuff in the middle. That basically, if people want to buy and exchange cryptocurrencies through a decentralized exchange, which this is, then they're basically using the liquidity pools to fund those transactions. I don't know if I'm being that clear on this or not, but it's changing and transforming the way financial services operate. And what happens is the protocol that has created the smart contract offers their governance token to reward those parties that are providing the pools, all right? And they also give them a share of the fees. So as a result, and again, you must do the research on this, all right? I mean, I've invested in some pools and I'm getting annual percentage rates in certain cases ranging for low risk ones of about 22 to 24% per annum to high risk ones that are paying about 150% per annum. But I know what I'm doing, all right? And I know the risks, and I diversify across a number of these different pools. But there is the opportunity, if you do the hard yards, and I have to emphasize, if you do the hard yards, you can make life-changing money in this space. All right, but it is not without risk, and you have to understand what you are doing, because you can lose money in a heartbeat if you don't. Okay, but it's transforming the way things are working. The Bitcoin original white paper said a peer-to-peer currency that can be transferred between people individually without going through a financial institution. This decentralized finance is taking that to a new level. And this is what I was saying before. Bitcoin was the initial innovation, very simple, very solid, very stable, and all these other coins are around the outside. It's a very long-winded way of giving my recommendations, isn't it?
Tim, I think we could go on about this for ages, for hours, but I know we got to be a bit considerate about your time. And I think our podcast, this is going to be one of our longest podcasts, I think, because there's a lot of bits in here that, I mean, we got to keep everything in. I think it's super fascinating. I think we spoke about a lot of interesting things that are trending right now. One thing that
but I do want to emphasize, honestly, I've been in this space full time since 2015, right? So I know a lot of the nuances. I'm not saying I'm perfect, by any means, but everybody, if you want to get involved in this, you have to do the research, right?
Oh yeah, for sure.
And be very careful about the influencers you listen to. There are lots of bullshit artists out there on YouTube just trying to sell you their services. But there is some, I'm happy to flick you some, if you do some show notes, I'm happy to flick you to some curated list of really good quality content providers, if that would help.
Oh no, yes, please do. We can definitely include, guys. Yeah, we can include all that in your show notes. And I think, Tim, what we'll do is we'll also include your podcast in our show notes as well. And highlight what people should definitely be be listening to you guys. Dave, you want to take us out, man?
Where can people find your book? Where can people find your book, Tim?
It's on Amazon.
Yep.
It's on Amazon. Oh, hang on. Can you hear me? Sorry, I might have frozen now. It's on Amazon. It's down. I can send you a link. A link to it, for those that might want to look at it. The book is a few years old now, but it looks at the core fundamentals of blockchain in plain English, like I've described everybody today. So I'll send you some details on that. But it's one of those spaces that, why the book is called Down the Rabbit Hole is once you go down the rabbit hole, trust me, you will never come back. It is a green field of opportunity. And if you've got entrepreneurs listening on this podcast, the opportunities are immense if you just understand what's going on.
Awesome, Tim. Thank you so much.
Down the Rabbit Hole.
Yeah, it's called Down the Rabbit Hole.
Lea.
I think we'll link to it in our show notes.
Down the Rabbit Hole is the power of the blockchain. As I say, Amazon's got the digital version. We're just waiting to see if we do a third print run of the book, but I think it's going to be very much digital because there's another version should be coming out. I'm about halfway through it, but it's about finding the time, as I say, because it's out of the 24 hours, I'm already using 36 of them. So I've earned these gray hairs, trust me.
Well, yeah, thanks so much for your time, Tim. I think I certainly learned a lot from this, and I think our listeners will learn a lot from it too. It was really fantastic information. I feel 100 times smarter. So thank you very much.
I'm happy to do an update in 3 months or 6 months, whatever.
Yes, please.
As to what's going on, if you felt that was appropriate, because I think this space is moving so quickly. That we'll know how the NFT space is really shaping up. We'll see how the decentralized finance is moving. We'll hear more and more about central bank digital currencies and all these types of things. So looking forward to it if we do it.
Oh, for sure.
That's really good. Yeah, we certainly will. So for anyone listening, don't forget to check out our show notes at businessoverdrinks.com and to follow us and like us on social media. So just search Business Over Drinks on Instagram, YouTube, or Facebook or LinkedIn. Like, comment, subscribe, support us, and we can keep bringing in fantastic guests like Tim. So thanks so much for your support, everyone. And once again, we discuss stuff that isn't financial advice, just for entertainment purposes only. As Tim emphasized, do your research. And Terng and I are always drunk, so do your research.
Don't take anything we say seriously.